It seems like every time we get together, there's something in the background. There's something big going on. And I would say this time is the fact that the latest inflation data have been disappointing. You've done 300 basis points of rate hikes since March. The core CPI basically is stalled out. The headline CPI is stalling out just over 8% year over year. Core number continuing to rise. And the employment market, the market's still tight in terms of jobs and the economy not slowing down. So what's gone wrong? All those rate hikes, what have they done?
Well, I do think they will have an impact, and in some ways have had an impact. I would cite the housing market in particular, where it appears that increase in rates has really changed the dynamics there. So that's someplace that I would say there are not long and variable lags. That market anticipated Fed moves that before they were even in train this spring, and so that's a place where we've seen impact right away. But it's a big ship, and it takes a while to steer the ship, and so the housing market is not the whole economy. So
it certainly isn't, and it's certainly not one of the main things driving inflation now. Of course, prices have fallen, but
rents are important, though.
Well, they certainly are.
Yeah.
They certainly are, and in fact, that's one reason why people are so worried about inflation staying high next year, is that those rents are, the way they are calculated, they're going to spread out over several months.
Yeah, but we're aware of the lags in the calculation, and so we'll take that on board and take a look at that. But yeah, you're right. The core measure of PC inflation is still in the high fours, and the Dallas Fed trim mean 4.75 or so. So pretty high inflation in the U.S., even if you try to trim out some of the more volatile components. So we're going to have to get that turned around, moving in the right direction, back toward 2%.
So how are you going to do that? What does this mean for the restrictive terminal rate? The September SEP's medium target interest rate, 4.4% this year, 4.6% next year. After the latest data, what are your projections now?
Well, if you look at the September Summary of Economic Projections, the so-called dot plot, it did seem that the committee was coalescing around further rate increases at upcoming meetings, even by the end of the year. So that seems to be the base case right now. Most of that has been priced into markets, so I would anticipate that that's having an impact right now. So that's good news if you're trying to get inflation down. But we'll have to follow through on that in the subsequent meetings this year and get the policy rate up to a level where we can put meaningful downward pressure on inflation. I think that's the main goal immediately ahead of us at the committee.